Trading options is not easy, and that is why most people lose all of their money when they're first starting out. Becoming a profitable options trader is not as easy as it seems when you watch the YouTube videos and everybody has a McLaren and they wake up at 6 a.m. and they trade for 2 minutes and then they make $1,000. It's not how it works. Don't get me wrong, in some cases it is, but the common misconceptions of options traders, in my opinion, is pretty hurtful to the people that are just starting out because it really gives people a false sense of hope. So when they start out and they don't make $1,000 on their first day, or they can't turn $10 into $150, you get very discouraged. Now, it is very possible to get to this point, but it does take a lot of knowledge and practice to get there, which is why I'm trying to give you guys a head start and let you know the top 3 mistakes that you can make as a day trader so that hopefully along your journey you can avoid these things quicker and become a profitable options trader quicker. Mistake number 1 is going to be trading blind. I see beginners do this all the time. Me and my partner run an options trading group where you can pay monthly to get daily callouts, daily alerts with stocks, stock options, crypto, sports betting, as well as hundreds of resources to be able to learn how to become a good options trader. Now, I will tell you that 90% of the people that join our group are currently trading and losing tons of money. I am not at all trying to sell you on our group. I just wanted to use this as an example to get where I'm going. With that being said, people come to me all the time. Every single day, I have 5 to 10 people private message me saying, hey, I just started day trading and I saw this chart going up, so I bought a call and it ended up going down. What am I doing wrong? And why do I lose money every single time? Now, I will be honest, I'm guilty of this. I have done this before. When I first started options trading, I had no idea what to do, except I knew that you can buy and you can sell. So in my case, what I would do is I would actually try to fight the trend. Every time I saw the stock go up, I would bet on it to go down, which is called buying a put. When you buy a put, you are putting money on a stock in hopes of it going down. Now, what I didn't realize is that when you go into trades like that and when you try to fight the market or when you try to trade without having any sort of strategy, 9 times out of 10, you are going to lose your money. One of the biggest ways that you can avoid going into trades blindly and actually starting to understand how patterns work and how to form a proper strategy is by picking one stock. For example, I'd recommend the S&P 500. It's a very basic stock all around. It's not crazy volatile, and it is a large mover of the entire market. Now, getting comfortable and getting consistent with the same stock and learning how it moves is very important. You're not going to ever be able to predict how the stock moves, but getting comfortable with its certain patterns is a solid thing to do. Now, I would also recommend looking for patterns and staying consistent with a single pattern. Now, what I mean by a pattern is this. A lot of the times, as you can see on my screen here, the stock will go up, the stock will go down, it'll go down more, it'll go up more, but there are certain patterns that you can find. A pretty common pattern is a double bottom. As you can see here on the screen, it might be a little hard to see, but the stock started up here, came down, came about halfway up, and then came down to almost the exact same point and bounced off of it. Now, I'm not going to make this video a whole thing about patterns and how to read them, but when you get to the point where you can somewhat predict that if the stock goes down, comes up halfway, comes back down, touches it, and bounces up, you know that it's gonna go up. Trading with a pattern opposed to trading blind is one of the biggest things that you can do to prevent losing your money. Mistake number 2 is going to be not setting a stop loss and a target. These things that I'm telling you are gonna seem so simple when you're watching the video, but when it actually comes to real life, it is a lot different. Now, when most people are starting out, if you enter into a trade, you are hoping to make a lot of money. Now, in doing so, let's say you put $100 into a call. If that order starts going down and you start losing money, a lot of people start to panic. They don't want to go out on a loss, so what they do is they hold and hold and hold and hold. And yes, sometimes you can hold and sometimes you can end up reversing and going all the way up and making all of your money back plus a ton more, but in a lot of cases it does not work that way. Now, what exactly is a stop loss? A stop loss is a price that you can set your option at to automatically sell if it reaches below a certain point. Now, let's say my options contract is worth $100. What I like to do is I typically like to stay between 10 and 30% of my contract. So what I would do is I would set my stop loss at, let's say, $75. Now, that means that if my trade doesn't go in my favor and it ends up going down, it will automatically sell me out at $75. Meaning, yes, I lost $25, but it saved me from going any lower than $75. Now I have that $75 to take and reinvest into another stock versus me going in, throwing my money and hoping that it goes up and never selling. One trade like that can wipe out your entire account account, you can go from 100 to 0 and not have any money left. That is why stop losses are so important when it comes to options trading. On top of that is going to be your target. There's ways to go about finding a target. It's very hard to estimate where you want to get out, where you want to get in at, but a lot of people make the mistake of putting their money in an options contract. They end up making a ton of money, but they don't want to pull it out because they want to make more. They get greedy. They want to consistently keep making money on that contract. But the thing with options is that options move very, very fast. So 1 minute you could put $100 in and be up $200, but the next minute you could be down $50, negative 50 from where you started. The biggest thing here is to not get greedy and to set those targets so that once you make $50 profit or once you make $75 profit, it automatically sells and you keep that profit right in your pocket and you can reinvest that into the next trade. Now, I do want to quickly say for a lot of beginners, there's a lot of back and forth, whether do you use Robinhood, do you use this, do you use Thinkorswim, whatever. I do want to really quickly plug that I use Webull. I'm not specifically saying this to promote this. I'm only putting that out there because everybody always asks me what I use to trade. I like Webull because they make it super simple and I can also see charts like this. If you want to check it out, I do have a link below. We both get free stocks if you sign up, so why not? Now, going into the third and final mistake is going to be chasing an entry. Now, even if you have your strategy all completely lined up, you're super confident, you found a double bottom or you found a head and shoulders pattern and you think it is going to be perfect, you can have everything in line, but if you chase an entry, you will get absolutely wrecked in most cases. Now, what do I mean by chasing an entry? For example, I think everybody is familiar with the AMC pump. There was a time where AMC's stock absolutely skyrocketed. It went absolutely ballistic and everybody made a ton of money off of that. Now, there's a lot of times where this happens. This also happens in earnings. Obviously, nothing compared to AMC happens day to day, but when you have earnings, when a company announces its earnings and their earnings do really well, the stock ends up skyrocketing, or maybe it'll go down a lot. But regardless, a lot of the times people like to chase these things. Now, when they see it going up and up and up and up, they wait and they're like, oh, I think it's gonna go down. And they're like, oh my goodness, this is never going down. I need to buy in. And a lot of the times you will get in and you'll make money, but then a lot of the other times you'll chase an entry and as fast as it went up, it will tank. When you're playing with volatility or even when you're just playing with a normal contract that you're getting into, even if it doesn't have a ton of volatility and it's moving at a normal speed, you never want to chase an entry. You need to find your entry, where you're going to enter at, set your stop loss, set your target, and have it be that. Don't ever chase something just because you think it's making a decent amount of money. For example, right here, I pulled up these green candles. As you can see, it hit a bounce, it went all the way up, and these green candles are very, very nice. To somebody that's just starting out, they would probably see 1 green candle, 2, 3 with good volume, and what they would do is they would buy up here at the top or close to the top. And when that happens, you end up getting drowned out by this red. Not gonna get too into that, I'll leave that for another video. But those were the top 3 biggest mistakes that you can make as an options trader. I've been through every single one of these myself, and I even come across these in my day-to-day because sometimes I do get greedy or sometimes I don't set a stop loss, but these are all things that you should really, really take into consideration before you start trading options. Another thing I like about Webull is that you can actually paper trade. You can do this on a lot of different accounts, but like I said, I use Webull. Paper trading allows you to trade with funds that aren't actually yours. They're not even real. And you can take these option contracts or you can take these stocks and you can trade them with fake money and you can see what would happen if you actually were to have used real money. Now, yes, it sucks because if you hit a big play, you're not going to make that money, but it's really good just to see some practice and just to see what you would be capable of with real money. That just about wraps up the video. If you guys are interested in learning a bit more about options trading and following along with some pros, I will leave the link to my group in the description. But with that being said, I hope you guys have a great rest of your day. I hope you learned something from this video, and peace out.